Sorry, guys. One more second. Okay. Let's see who's next. I think Bellin. Go ahead. Let me request you to be unmuted. 1 second. Okay. Bellin, can you talk now? Should be able to talk. Okay. Maybe you stepped away. Let's just go. I'm going to write everybody's name down so I can make sure that I get the people in order as they came in. Try to make this as fair as possible. Just give me a sec here. So, oh, lots of questions, lots of hands. I like it. Okay. Um, Yash, you go for it. I will have you unmuted here in a sec. Since give Dylan some time to come back here. All right, Yash, can you talk? Are you able to talk, Yash? Okay. I'll circle back to you two. Duncan. There, Duncan.
Hey,
Hello. Yeah, hey, it's Yashir.
I'll go ahead, man.
All right.
Yeah, like just wanted to check like if you would like give me suggestion for just stocks as well or only options.
Wait, sorry, what was the question?
Like would you like if I have a question regarding just stocks but not options trading, would you be answering that?
Yeah, of course.
Oh
Anything
yeah.
stock market related, financial, anything. Doesn't even have to be that. You can ask questions about brokerage accounts or retirement accounts, that kind of thing, whatever.
That that would be great. So yeah, like I just entered like in a play like I know like recently all the IPOs were so hot, but like since I bought like it's just it keeps getting deeper and deeper. It never comes back to that original level and like so I thought about that like if I have like a big position, I would just sell premium on that, but it's not optionable. So what would your suggestions be on that? The ticker is TIXT.
Um, it doesn't have options, you said?
Yeah, like the volume remains pretty low, but like on the IPO day it gets good, but there it doesn't have options on Robinhood. So
Just do shares. I mean, if you really want to invest in it, do shares if something doesn't
yeah,
have
but
options.
yeah, like I have it, but like now I see like from the IPO day, like it's always getting lower, and it's almost like 25% bottom, and like there's no volume honestly in that. So should I just hold on to it or
Well, this is why I don't like new IPO stuff because you get into a situation where it'll probably just come down on you. It's likely that it will, especially a new IPO. So my advice is to avoid IPOs in general, unless you
because
really like the company, unless you really believe in what they're doing and the ticker, right? As far as
yeah,
getting out of the position, I don't know. Is the company good? What's the fundamentals about the
it's
company?
it's it's like it's Canada's biggest telecom company. It's called TELUS, ticker TIXT.
Man, so here's the other problem with IPO stuff. There's no data in the past for me to analyze, so I can't tell you really anything about this. It's at a low, and where does it go from here? I have no idea. I really couldn't tell you because again, there's no data for me to analyze. So this is why another reason why I don't like IPOs, because you just have you're basically gambling at this point.
That's also true. Thanks for that. And also, like, I'm new to options, so what would you recommend? Should I start with positions in Robinhood or just get to another broker which is
I,
better for options?
I think that first question: are you successful trading shares?
Yeah, I've been doing that for a year and a half, and I probably have almost 24% of the returns, but pretty new to options.
Okay, so at least so that would be the start. I would say is if you can make money selling or buying and selling shares, then you have a chance to make money doing options. I would recommend you learn everything there is to learn about options before trading. Most people want to jump right in head first without even knowing what theta is. All right.
Yeah,
You need to know what
exactly.
Greeks are. You need to know what the option chain is. You need to understand everything in the option chain. And you need to understand what buy to open and sell to open means. Right? Understand what it means to sell options and understand what it means to buy options because there's two sides to one coin. The one coin being options in the market, the one side being the buyers and one side being the sellers. If you understand both sides, you're going to put yourself in a better position no matter what you decide to do. As long as you understand both sides, it's easier to trade because your understanding and concepts and foundational education is there. Does that make sense?
That totally makes sense. Like I just got into options because like some positions I had like a lot of shares, and so I was learning. So what I used to do, like just like earn premiums on those like at a higher price, just to like even maintain my positions. And now like I am being a part of this channel, so like I can learn more about options. But yeah, that sounds good.
Okay. All right. Let's see. Next, Duncan, go for it.
Yes, hello. How's it going?
Pretty good.
Um, One thing that I wanted to just ask you for your opinion was DKNG. I was charting it earlier today. I also took a position. It was alerted by somebody, one of the analysts in the Discord. But I was noticing a ascending triangle on it. I was wondering if you could just double check my work um, on the overall chart. I'm seeing it on the daily.
1 year, 1 day.
Yes.
So the thing that makes me nervous about this is that it's at a high, and to be bullish when something's at a high, the probabilities for me are. I'm a probability person,
Hmm.
and I think probability of something being at a high to come down is more likely than something continuing up. Right? It's got to have some kind of retracement. Now, um, with DKNG, I think it's more seasonal based. Right? It's based on the NFL and NBA, and there's a lull in between, right? Isn't there a lull between NBA and NFL? So
Yeah.
NBA's going to be wrapping up soon, and NFL will be starting in like August, I think, or preseason, something around then. I think maybe summertime we're going to see this come down. Everything requires a retracement. I mean, it hasn't had a solid one since October, so um, we may
So
see this.
you're
Yeah,
saying it might go down because of mean reversion.
yeah. I think we should see some kind of reversal. I mean, it did do a pretty decent reversal just recently. See from 70 to 56. I mean, that is a pretty good reversal, but I'm a firm believer in things that are seasonal. They have movements in particular times of the year, and they have down times in particular times of the year. Right? So this may be in the long run a continuation upwards, no matter what. But in the short run, we should still see some pullbacks from highs.
I see what you mean. All right.
And it
Well,
looks
thank
like it's in a. I mean, I'm gonna draw a trend line here just to see. Let me share my screen real quick for that.
you. Yeah, thank you.
So from the bottom, probably go like that. Um, Let me get rid of some of this. Make it a little easier to read. So currently it's sticking to this trend line, right? Um, might see it continue to bounce off this trend line and continue upward, but at some point it's going to break through this trend line and go bearish. Right? And when it does that, that's the question, right? That's the $1 million question. Um, like I said, I think the question you got to ask yourself is with DraftKings, what's their biggest income producer? Is it the NBA? Is it the NFL? Is it baseball? Is it soccer? What is it? That's the question you got to ask. And then when you get the answer to that, then you need to determine what are the times and the seasons of those particular sports, and at what point in the year do those sports not play? Do they overlap, or is there just a lull between the two? And that lull between the two, I think that's when you see the downtime, right? You see the downturn on this particular ticker, and I'm thinking summertime, right? June, July, August. So I think that's when we see a pretty decent pullback on this, just because nobody's gambling, right? So that's what I would look into if I were you, as far as DKNG goes. Does that help? Stop sharing. Um, does that help, Duncan?
Yeah, thank you very much.
You're welcome. Okay. Next one is Samantha. Let me unmute Samantha. Okay, Samantha.
Hello.
Hi.
I have a question about purchasing option after the market closes. Like today, I think Carl sent a sign about NEO, and I purchased that at 166 today, and then I purchased another one after market closes, but it doesn't show on my like Robinhood account. I was wondering, how does that work? Does it account, like, does it makes accounts at the money I paid, which was cheaper, was 133, I think, after market closes, or does it count when market opens the amount I'm gonna pay for the option?
You can't buy options when the market closes.
Okay, so it seems like pending then.
I would cancel it. You don't want to pin that. You just cancel it and try to get in tomorrow.
Okay. Another question is about Louvre. I purchased on Friday and it seems down pretty badly. I don't know yet how to read the chart. Wondering if you have any opinion on that, if that's gonna go up, or should I just forget about it?
You said move? MOVE?
Yeah. Yes. I mean, LUV.
Oh, love. I mean, the value of the stock really didn't go down at all. I mean, it did a little bit, but honestly, like if you're, just like I was saying earlier, like you've got to really learn and educate yourself on chart analysis, technical analysis before you start trading. You shouldn't be trading if you're not doing that. If you don't know how to do any of that, you should not be trading. I would highly recommend against taking anyone's alerts until you can fully understand why they're getting into it, right? Because you're going to be in the position of losing money. That's how a lot of people lose money, because they're just taking stuff without understanding it. And you know, we try to get everybody to really learn that that's a mistake. You do not want to do that, right? So I would advise highly against doing that blindly, and instead of taking the play, learn from it. Like, understand what they're doing. Don't take the play. Just watch it, right? Pay attention, learn it, ask questions. Why did you get in? What gave you the indication of getting in? Why did you choose that strike? That kind of thing, right? So it sounds like, and another thing is, if you're using Robinhood, then you can't do chart analysis. You've got to get it to a different broker altogether,
Okay.
because there's just no way you can do any kind of technical or chart analysis in Robinhood at all.
Okay, I see it. Yeah, I've been doing this whole thing for 1 week, and it's a lot of things to catch. But I'm trying. Luckily, I gained money, so um, I guess it's more as a faith or than knowing what I'm doing. But so
You
okay,
should
so my
only concentrate on shares at this point. If you cannot make money doing shares, you will not make money trading options. Right? So start with shares. That's the beginner entry level stuff. If you can make money there, then you can consider getting into options.
okay, I see it. So just cancel all of the aftermarket purchase
Yes,
um that I did. Okay, all right. Thank you very much.
you're welcome.
Bye bye.
Bye. Okay, let's see. Just give me 1 sec, folks. Next person is Miles. Go ahead, Miles.
Hi. So, I saw that you were just talking about DraftKings, and I'm currently up 33% on them, and I only have like 2.8 shares of them. What would you recommend I do? Because I'm trying to grow my portfolio, and I don't know if I should just take the profit or I'm not sure what I should do.
You should, because if you've only got two or so shares, that means that you don't have enough money to be trading things that expensive. So you should probably
Okay.
consider trading something a little bit less expensive.
Okay.
Because there's no room for you to make money when all you're doing is two shares. But if let's say you get into something at $20 and you can buy 10 shares,
Right.
you're in a better the growth. There's more growth potential there.
Okay. Gotcha. All right. Thank you so much.
You're welcome. Okay, let's see. Viral. Go ahead, Viral.
Hi. I just joined yesterday and I'm doing buy sales from last few years, doing good in 15-20% profit. I have a question regarding Greeks. I'm kind of new with options. So I know the delta, which is the price change of $1. So it's a rate of change. Theta would be time decay. I'm having a hard time to understand the gamma and vega. So would you give me one example to understand? I went to PDF and tried to learn, but uh, I'm not getting much. So that's what I want to know.
So I've got a video that I made specifically on Greeks, and it'll answer your question 100%. And it actually goes through each individual Greek and how they affect each other. So I recommend you watch that, and that can be found on my channel in Discord.
Okay. And one more question is regarding plug power. Uh, I invested last year around buying price was $5. So I'm kind of 900% on it. But I want to add more, but I don't know uh, which deep, the longest deep that I can add. Would you have any suggestion for that?
Well, as far as plug goes, right now is the best price it's been in since you got that price. Um, as far as so plugs come down recently, and they had a little bit of trouble with the SEC, I think it was, or they were somebody said they were lying about their numbers or something, so that's why their price dropped. Um, right now is it's at support, and it's the cheapest it's been since it pumped. So I mean, if you really want to buy more, I'd say probably now is the time to do it. Uh, but at the same time, why didn't you sell those shares when they were above $70?
Well, I'm investing in EVs from last year, slowly. So I'm kind of investor more than day trader. So I was thinking upside till 80, 90, but it just pulled back a little bit. So I thought it will now, but I'm gonna add little more on it.
In my opinion, long-term investment is a waste of time. Your money just sits there, doesn't realize profits, doesn't compound, it doesn't do anything but just show value, right?
Right.
Get in and out of a position with profits, recycle that money and do something else, or re-enter the same stock at a pullback. right? Because if you believe it's going to 90, then okay, you should have got out at the 70 mark because nothing ever continues up. Nothing does. It never will. No stock ever will continue up. Even Tesla has proven that it does not just go up. Everything does that. Everything goes down, everything goes up, everything goes down. Nothing just goes up. So always take profits when you've got them because the market's going to take it back. And now you're going to be sitting here thinking, damn, you're up 300% now, but I bet you were up 600 or 700% when it was at $70. So I personally would have taken that off the table then. And then now I would be re-entering right now with more money, right? Because when it was at $70, you had more money than you've got now. So had you sold at 70, taken that money, and now that it's at 38.91, you get back in with that total amount of money that you took over $70. Now you've got more money in that position than you did initially. That's what's compounding about it. Does that make sense?
Right. Yes, sir. Thank you.
You're welcome. Okay. Elysian. Let's see. Go for it.
Hey, Hostile.
Hey.
I just have a question on ACB. I'm trying to see if my analysis is right. Since the big push in marijuana stocks back a month ago or so, it seems like they've gotten beaten down. ACB's at a decent support. There's still another support around 830. I'm looking to get into a few CSPs on it for a $10 strike in April 16th. Just wondering your thoughts on it.
So my thoughts with weed ticker or stocks, weed stocks is until the federal government legalizes it, these stocks ain't really going to be doing too much at all, right? And here's the other thing: Biden's cabinet just got rid of 5 members that had a history of smoking weed, right? They just fired them, and what does that say to those folks out there that are in the marijuana industry or into marijuana stocks, right? Actions speak louder than words. So I would be a little bit skeptical about this stuff. I mean, granted, right now it's probably at a decent price. I'm not gonna lie, it's at support level, I would say. I mean, um, I'll share my screen again. It's at a decent support level, I would say, but you know, I just feel like until it's legalized federally, this is all just hype, smoke and mirrors. That's all it is. Because, like I said, the federal government still goes after people in California, still go after shops in California that sell um, concentrates, right? Because it's still illegal. It's still a schedule, whatever the hell, drug that equals the same as heroin and cocaine, right? It's still by law that. So until that becomes a non-issue, I personally won't be bullish on um, weed stocks. Right. So, I mean, there could be some times where you're going to get into it and it does a pump, and maybe right now is a good time. I just don't know. I don't follow weed stocks all that much. Like I said, it looks like it's at a fairly decent support level. I would wait for it to come down some more, though, because it's still creating, I mean, it just created a lower low again. So I would wait personally. But, if you get into a CSP now and you give it time, I'm sure that it'll come back and go out of the money anyways, right? Because unless it breaks through. So if it breaks through 915 and then comes down and touches 814 and breaks through that and goes lower, next thing's going to be 671, right? I mean, you got 3 support levels. I pay attention to what it's doing at these levels, and the current price that it's at, that's not a strong support level in my opinion. It's a weak one, so I wouldn't get into that. But that's just me personally. Does that help?
Yeah, I was just looking at it because I saw some news that the House was resubmitting a bill for legalization. So I figured it might pump up again. But no, that makes sense because last time it went into the House, it got denied in the Senate anyway. So it makes sense that it's doubtful still. And with the Biden administration, who knows?
Yeah, I mean, everybody was like, all like, uh, what's the word I'm looking for? Not pessimistic. Pessimistic is the opposite of the word I'm looking for. Somebody help me.
Optimistic.
Optimistic. There we go. People were optimistic when Biden was elected when it came to weed stocks because they're all like, the liberals and the leftists, they all want to push weed. They all want to make it legal. But the reality is Biden, he's pandering to the left. I think he's more of a moderate Democrat that is an establishment politician. So he's not interested necessarily in leftist policies either. Um, so I think people's hopes got potentially crushed when he's firing people in his cabinet that had history of smoking weed. Hell, Kamala Harris had a history of smoking weed. How come she's not fired, right? So, there's that too. But until the federal government makes this legal, I'm not interested in weed stocks. When it does become legal, then I'll be looking at ACB and saying, okay, you know, this is potentially going to start really flying because it's now legal at the federal level. And once it's legal there, then a lot of states are going to start, coming into play, except for most of the really right-leaning states like Texas. Hell, I think even Florida, even though it's a right-leaning state, they pass medical marijuana. I think Texas, so like Texas, most of the Rust Belt, I'm not Rust Belt, the Midwest states like Idaho, Oklahoma, um, North Dakota, South Dakota, Wyoming, states like that, Iowa, they're probably not going to pass any kind of weed laws anytime soon to make it legal in their states. However, states that are kind of like purple, which are, they can flip from either side, I see those potentially passing laws to allow legalization once the feds allow it, like, North Carolina, Virginia, Georgia. Apparently, Georgia is a purple state now. Um, what are some other ones? Arizona, New Mexico, Nevada. I'm sorry, not Nevada. Nevada's already legalized it. Shit, what's the fucking other one? You get the point. Um, I'm just not interested in these types of stocks. It's just not to say that it's not gonna pump. I just don't have faith in it right now. Just my personal opinion.
No, understandable. Thanks.
You're welcome. Okay. Let's see. Siddharth, your turn. Siddharth, you there? Okay. So circle back to him. Steven. Steven, are you still in here, Steven? Steven Malone. You are up. Where did your name go? Hold on. Stupid ass Zoom. Smell like Zoom. Okay, Steven, you should be able to talk now.
Can you hear me?
Yep.
Okay, good. Hi, how you doing? I was talking to you last night about like selling premium, like doing like the CSP cover calls. You told me like watch your video, like the first hour of it.
Oh, okay. Yep.
So I just kind of want to get clarification on that. Maybe go through an example with you if you don't mind.
Sure.
So like I'm looking at plug, for example. I don't know if you mind pulling it up or not. I have it on my screen as well, so I can like look at it too.
Sure. 1 second. Okay.
Okay,
right.
So I'm on the 4 hour right now.
Okay.
And I'm seeing like some really good support. I'm seeing like a double bottom, and then it's touched the support like 3 times, and then earlier on. So I was like thinking about, well, I'm not going to do it. I'm just like kind of learning still. But like if I want to do like a cash secured put on this, right? Would I one thing, would I put it at that support, which is at like $33, or would I like how would you, where would you, how do you find your, like, do you put your strike at a support, or do you base off of like percent in the like your delta?
It varies. At this point, at support at $33 is not good because there's no open interest,
Okay.
especially on the April 16th contract. 35 is where the interest is at. Unfortunately, like I personally would like to get it at the money sometimes, but there's no open interest. So if you're looking at my chart or my option chain here, the only OI that exists right now is at the $35 strike, and the premium for that is kind of whack.
Okay.
So that one I would kind of,
Hmm.
if the stock price comes back down to 35, that's probably where I would try and sell a CSP on that.
So you typically sell like at the money.
Yeah, if you can get support levels at the money, that is ideal.
So like if you go to like the April 23rd like expiration, I was looking at like the 33 for that one. So that has like 7, or where is it? Okay, well, I guess that's pretty low as well, but like maybe like the 30s. Actually, those are all really low. Never mind.
Yeah.
Like
so,
saying anything like over 500, right? Is what you're saying?
Yeah.
typically?
Anything over 500 is probably good enough. 1,000 is better.
Okay.
But I would wait for this to drop to 35 before getting into it. Otherwise, it's a lost cause, right? You got to kind of move on and look for something else. If it pumps to 40, you could potentially do that strike, all right?
Okay. Yeah, that makes sense.
Let's see, where's 40 at? I mean, 40 is not the greatest though, and I don't know. I'm still sketched about Plug because of their lies about their numbers, right? And even though it's probably still a good company, short term, that's negatively affects the stock. And I don't like being in stuff like that. So I might wait a month or two, see how this thing pans out. Because I was trading Plug prior to that news, and I was making money on it, like good money. It was giving great premiums. I was doing $700-800 premiums at 40 strike. I think I actually got in when it did drop right here. What's that? A few days into April. I got in right at the 35 strike. I sold the 35 strike. I got 2 contracts, $700 a piece. I got out of both of them with 65% profit. I mean, that's fantastic. And now the premiums on it are kind of trash, comparatively speaking. So I like Plug, but me personally, I'm gonna let it just kind of do its thing for the next month or so and see what happens to it. And if it proves to sustain where it's at or pump, then that'll give me confidence in the stock to know that, okay, that news really didn't affect it as badly as some people anticipated.
Okay. Do you like look for a certain, like, you look for open interest as like, of course, and then do you look for like a minimum IV? Like, I guess the higher the better, technically.
Well, higher the better, yes. Typically, I'm looking for 10% return off leveraged money. So if I've got 4,000 or a $40 strike, I need a $400 premium minimum.
I was gonna ask that, yeah. Like, you guess like risk versus reward, like what you look for.
Yeah, I mean, 10% is kind of the number, right? I mean, anything lower than that, it's almost not worth it. Because, when you take 50% return off of a 10% leveraged cash premium, you're getting a 5% return on that leveraged cash, right? So, 5% is my required amount to make 60% annualized returns a year. Must have 5%.
Okay. And so like, for example, like, let's say for this ticker, like, what's it at right now? 38. So let's say I sell like, let's say it all works out. It looks great. I sell the 38 put. If by expiration, it goes to like 37, I'll be assigned those shares, but I'll collect the premium for it. And then if it keeps on going, if I'm still bearish on it, right, I would maybe sell a covered call at the same strike, like you were saying before, like the wheel strategy, basically. Like I would sell the same strike if I thought it was going to go down further. But if not, then I'd wait for it to pump. If it goes up to like 40, like 45, for example, then I would maybe sell the 45 put or 45 call, and then I'll collect that premium plus however much money I get for those shares as well. That's how you, right?
Yeah. So, doing covered calls, I always wait for a pump. Wait for a pump. Wait for it to get as close to that strike that has great open interest. That's where you want it at. That
Mhm.
way, when it does the pump, and let's say it goes above your break even on the shares, now you're looking at premium plus share premium, right? So you got option premium and share premium. And if it expires in the money on that covered call, then it takes the shares and you keep your full premium.
You keep the premium plus whatever extra cash that you got, the difference between like 35
And
and
40,
40. Yeah.
or 45, yeah. So it's $1,000, right? If it takes your shares away at 45 strike, you got premium for it. You got $1,000 in share profit plus whatever premiums you made selling the CSP and the CC.
Okay.
And the other thing is, if it does drop, like let's say you get to a CSP, it goes in the money and drops to like a pretty good support level. Let's say it comes down to like $30.
Okay.
Let's say it hits there, you could sell CSPs right there, and I guarantee you're going to see really solid profits. And here's the thing: is you're basically averaging down. So if you sold a 40p, went in the money, and it went down to $30, and then you go and buy or sell CSPs there, you're averaging down in case it goes below that, right? But if it doesn't go below it, you can hold that until expiration, keep the full premium, and that's going to make up for whatever loss you've got on that 40p when it gets assigned to you, so that way, once it does pump, now you're looking at profits in every single direction possible, right?
Mhm.
That's why I love this strategy, because there's multiple ways to make profit. And even then, like, you could roll contracts and never take assignment and continue taking in credit, ideally.
Can you get
And
assigned early, like before expiration?
you can, if it's
Is it
extremely in the money. It
okay?
must
Okay.
be really against you. I mean, like, if it's a 40p, you sold a 40p and you got a week left and the stock price is at 30, you might get assigned.
Okay, fair. Yeah. But if it was like a few bucks or like I was near my break even, then maybe it's not as likely.
Yeah, I've been in the position where I got assigned something. I sold a 1750 strike. It went all the way down to $12. I didn't get assigned until like 2 days before the expiration.
Okay.
So it was really far against me, and then I got assigned 2 days before expiration, and then I did just kind of sit on those shares for a little while. So, and I sold covered calls on them. So it was it's a great way to manage. I love this strategy because there's so many ways to manage it. It's not just buy an option, goes up, you sell it, buy an option, goes down, you get screwed, you do a stop loss on it, or you buy an option, it goes down, you just lose all together.
Yeah.
There's just no management in that.
I'm definitely like I'm looking more into this just because it's like time is on your side. You don't have to like worry as much about like time decay. It's on your side basically. It's like I don't have to worry about this stock has to go up 5% in the next 2 weeks in order for me to break even or even profit like
Right.
10%. You know what I
Right.
mean? Like as long as you pretty much can make money on both ends if you do it correctly.
Yeah. And worst case scenario, you just end up owning shares and set a limit exit order for the shares and still make money.
and at the same time, you're not really, because you can lose all your money in like when you buy contracts, at least with the shares, you still have that money base pretty much. Like you're not losing all of it.
Yeah, I mean, you don't lose anything. It's just
Yeah. Just in the shit.
unrealized loss at that
Mhm.
point.
So I have one last question, if you don't mind.
Sure.
Okay, so like for this one, it's at 38. You were mentioning like, I think in your video you were talking about like Fastly, and how like I think it was you bought a 75 put, it went down to 70, and you wanted to get out of it, or you could have gotten out of it for like $400.
Yes. In profit.
That was if you rolled it correctly.
No,
So,
no.
like, or just
I could have gotten out of that the Monday before the Friday of expiration for $400 in profit. And then I could have got back in it at the 70p
Mhm.
day of expiration and would have received more profit than what I initially received at the 75.
Okay.
So, I mean, that's the other thing is like, I wanted to own the shares, but my hard head is like, well, I'm just going to sit on it and just take the premium and then own the shares and then do covered calls. But the little guy on my shoulder that's telling me good stuff, he's like, hey, you should probably get out of this, take that $400 and then just sell another 75p, and ride the stock price up. If it goes in your favor, you're making money. If it doesn't go in your favor, you get what you wanted anyways, right? So that's what I should have done. I didn't, and here I am. I mean, it's not a big deal, right? I'm fine. I'll wait for it to pump up to 75 to 77 or maybe 78, and then I'll sell an 80 strike and hope to take in $500 to $700 in premium. And honestly, it's kind of like playing cat and mouse with the market as far as covered calls, because I know Fastly will go back up to $100, right? And the goal
Yeah.
is to play cat and mouse to where I get in and out of positions. So I get in a position when it pumps, I get out when it dumps, and if it's in an uptrend, if I can successfully do that all the way to $100, I'm gonna have taken in all that premium plus another $2,500 in value, right? So as far as the stocks are concerned or the shares, so I mean it's a great strategy. It's just you got to kind of manage it in a certain way. You got to kind of the timing. It does matter. So do take that into consideration.
So like you were mentioning, like, do you typically do rolling over, or now like you mentioned like you're doing at the money. So like for this example, I would say like the 38 put, but what about like if I sold maybe a 35, and then by expiration it was at like 37, I could collect that profit if there was any, which there should be, and then I would instead of doing the 35, then I would drop that maybe to like a 33, collect that premium, and then
yeah, I mean,
like,
rolling is great.
Roll as much as you can before you can get assigned, and do the same thing for your cover calls as well. Try to get in and out as much as you can, and just collect as much premium as you can before you get assigned shares and before those shares are taken away.
That and rolling a covered call, you can roll that too and take in premium on it. So don't forget about that as well. You can do it on both ends.
So like, yeah, it's like if this went up to like 45, maybe sell like the 47. If it didn't go up to 47, then I could collect that. If it went up, if I sold like the 47 call, it went to like 46, I collect whatever premium I might receive, close out that position, and maybe sell like the 50, and just keep on collecting that premium.
Yeah, ride it up, ride that wave
as much as you can before those shares are taken away.
That's right.
Okay.
And have a profit target in mind though for the shares. Do have a profit target, because if you hit that profit target and then you get out of a contract, you get out of the shares too.
Which your profit target would pretty much be at the same price that you got assigned, if not higher.
Definitely higher. Definitely. Yeah. So assume for a second that all you're doing is buying shares and selling them, and you bought shares at 75. You had a profit target, say 85 or 90. Well, you sell covered calls against it until it gets to that level, and then dump the shares, right? Because you're basically taking in profits in two ways at once.
Mm-hmm. With the share price going up plus your premium.
That's right.
Okay, yeah, okay. I really appreciate that. You can do, and you could do all this on paper trading. Like on paper trading, you'll actually get assigned those shares, and those will be like the shares will be called away. It'll just it
I
works
don't
the
think
same way.
so. I don't
Okay,
think paper
I wasn't sure.
trading will take shares or assign shares. I don't think it
Okay,
will. It treats it as a naked option.
okay, yeah. I just wasn't sure because I definitely would want to like
I
make
mean,
sure I'm
you
improve on
could
this before I just like go straight into it.
yeah, you could buy shares and then still have called on it, and it's gonna recognize the shares, and it's gonna still see your short call as a naked one, right? Because the virtualized trading, it doesn't it doesn't get rid of the contracts. They just go stale. So when it expires, they just go stale and sit there.
Okay.
So they don't realize.
So if I paper traded that, if I wanted to practice some paper trade, it would probably be better just like on my paper account, just buy 100 shares of something I'm interested in, and then just practice with the selling of the covered call, like selling of the calls and puts, and do it that
Yep.
way.
Yep.
Okay, perfect. Thank you so much.
You're welcome. Okay. Let's see here. All right. Armando. Let's see where you're at. Just 1 second. All right, Armando, you're up. You there,
Hey, how you
Armando?
doing?
Hey.
Yeah, I'm here. Sorry.
Yeah, just a couple of quick questions. What broker do you recommend aside? I have Robinhood right now, but I was just hearing you say earlier that they don't really show you the charge and all that good stuff for me to learn a lot more. And then if I get a laptop, like what would that same brokerage? Can I use like their website on the laptop? I'm fairly new on this stuff.
Yes. I would recommend Webull for beginners. It's a little bit easier to learn. Um, Thinkorswim is the best, but it's also complex. There's a steep learning curve. So I always recommend people start with Webull because you can learn what option chains are. You can learn how to chart. It's fairly simplistic. And once you learn those things, then you can move over to like Thinkorswim, and they get more complex, and it'd be easier for you to grasp, right? That and I always say this: hey, I can give you free shares of stock. So I got an invite link too if you want to do Webull. Now, if you just want to skip Webull and go straight to Thinkorswim, that's great too. I personally recommend, if you can handle the steep learning curve, to go that direction from the get-go. But if you find it difficult, then go to Webull. Does that answer your question?
Yes, thank you. And then second last question on the call options that you guys do. I noticed some of them, like you guys shoot the exit alert like minutes or right at the same day. Is that considered the scalping, or do you guys ever do like a call option that takes longer than a day? Like, because on Robinhood, I only get like 4 day trades a week or something like that.
3.
Then they mark. Gotcha.
Yeah. So Tilio does mainly, actually, I think Tilio does quite a few different things. He swings, he does leaps, and he does scalping. Zabes and Cal, I think, are mainly weak swing traders. Sometimes they'll do daily. Let's see. Shit. Give me a second. Shark and Stock Daddy, I think they do swings. FaZe also does swings. I would recommend, if you're just straight up buying options, I would buy things that are 6 months to 12 months out. Because if it goes against you when you buy it, you got time for it to come back. Like I'm in an Apple position right now that I called out right before the damn drop. I'm down $500 on it, but I also have until, I mean, my expiration is January of next year, so it could still come back. As long as it right now, if it hits 133, I'm back at I'm back in profit. Right, so
Mhm.
I've got plenty of time. So buy time. If you buy time, you will make money,
Okay.
especially if you get in
So
at a support level.
gotcha. So when you guys put up one of those entry alerts, I don't necessarily have to buy it through that date, right? I could extend it longer, like you say, and buy more
Yeah,
time.
you can
Okay.
buy anything in any time frame you want. That's just the one they're doing. Um,
Yeah.
I would, if I were you, I would as a new trader, I would target things that are, um, I would target things that are, um, when they do a swing trade and they say, you know, we're going to swing this and be in it for 2 or 3 weeks. That's something I would look for and do a 6 month contract. That way, if it doesn't
Okay.
pan out in 2 or 3 weeks, you've got another 2 months before that theta really starts eating away at that contract.
Gotcha. That makes total sense. Yeah, because I'm fairly new at this. I'm just trying to get the hang of all this stuff and just kind of watching all your guys' videos, trying to learn as much as I can on it. So
Okay,
yeah, appreciate
cool.
it. Thank you.
You're welcome. Okay. Let's see. Who was next? Michael, you are up.
Hey, what's up? How you doing?
Pretty good.
So like I was watching like I be watching on YouTube the lecture. I think it was like 3 months ago. You did that a lecture with Mario, and he was talking about every grid trader use resistance and support. So my question was right. So what is the difference between charting analysis and technical analysis?
Um, I would argue they're both kind of the same.
Mm-hmm.
Technical analysis is technicals based off of the chart, right? You know, indicators, volume, price action, support and resistance, trend. You know, that's all technical analysis.
Mm-hmm. So what about the chart one? It's the same thing, right?
Yeah, I would argue they're both the same thing, or are relatively close. I mean, I'm sure
Uh,
there's somebody out there that could say, well, this is TA and this is charting and
mm-hmm.
whatever. When I do technical analysis, everything's done on the chart. So I would say it's straight up
Yeah,
charting.
it's just same thing. All right. Yeah, so like my next question is, can you check SNDL for me and like and let me know if it's gonna go up because I sell a car secure put on that, but like I did it like out the money. I did it out the money, like the strike price is like $2.
That's
So
in
I
the
think
money.
no SNDL.
Yeah, that's in the money. If you sold a $2 strike, the CSP, that's
Oh
in the
yeah,
money.
yeah. Because it's a cash couple, yeah, it's in the money, yeah. So I did like a $2 one, trying to collect some premium, and then now I'm down. So because as soon as I sell the put, it started going down. I got a sign. I know I was gonna get a sign, but I was hoping like even though I got a sign, I could sell a few cover call on that. But right now it's like down. Like the cover code on that is like cheap. So can you
Yeah,
check it out for
it's
me?
pretty
Like,
trash as far as that goes. Um, I mean, you're looking at $5 in value on the cover call at $2 strike. That's pretty trash. I mean, I can't begin to tell you what's going to happen with the stock. I just can't. All I can tell you is the times of the year are going to change, right? The market cycles. You got bullish seasons, you got bearish seasons, you got neutral seasons, and then you have transition time frames. So, bullish season transitions into a bearish. So it goes neutral, then it goes bearish, and vice versa. if something is at support, um, you know, I'm sorry, something is bearish and it's falling, at some point it's going to transition to neutral time, and then from that neutral, then it starts going back to its bullishness, right? So it cycles. It's like a roller coaster, right? You get on a roller coaster, you go up, down, around, around, the side, to side, and everything under the sun. That's what the stock market does. Right? So anticipate that and learn potentially learn the time frames of the year so that you can have an expectation of the market as a whole and the direction of the market. I don't know why it keeps muting you when I ask you to unmute. That's weird. Okay. Does that answer
Oh,
your question?
oh yeah, yeah. Yeah, that answered my question. But um, I think I'm about to learn about the cycle of the, like you said, the cycle of the year, when it's bearish, when it's bullish, and that, right? But like I was watching Mario, and it was you and Mario lecture, and then you know, he was showing lower levels. I mean lower lows and lower highs, stuff like that. He was showing me how to chart. And like I was watching it for like 10, 20 minutes, and like I feel like, I was like a pro. So I went on Weibo, I charted SNDA, and I was like, that's support, that's this, that's that. Yeah, I don't even know if I know what I'm doing. But like I just feel like I have to learn a little bit more about that. But like I could swear like I knew like it was gonna go up, but now it started going down. Even if it's going down, I still buy more to like bring my average price down. Right now, I'm holding like 21,000 shares at an average price.
Jesus.
I'm holding like 21,000 shares, right? At an average price 196.
I mean,
And
I think in time you will see it come back up. But again, I know I've said this before. I don't like things this cheap because you see how fast it went up, you see how fast it went down.
it went down, yeah, yeah.
So I personally wouldn't touch stuff like this.
But like the trading thing, right? Does he like it doesn't work on like penny stocks like that, right? Like should
Nah.
I keep? Oh, that's what I was saying. Because so what type of stocks like the trading thing, like resistance and like support, really works on? Like is it like um mid cap, like large cap?
No, I'd say when I do support and resistance, I think anything at $10 or higher. I mean, honestly, maybe even
Mm-hmm.
$5. You could argue
All right.
at a
Mm-hmm.
low $5.
Mm-hmm.
And anything above that, charting generally works. The higher in value you go, and the longer a ticker has been around, the
Mm-hmm.
more weight it holds as far as support and resistance levels, right? Like
All right.
Apple,
Makes sense.
you can say, hell yeah, that I can tell you support and resistance all day long. With SNDL, I'm like, well,
Can
mm,
you can you share on your screen so I can see? If you don't mind, though, if you don't mind, I'll try.
I mean, I'm not really doing much, but sure.
All right, no problem. Thank you. Appreciate it.
I don't. This I say. I mean, I guess you got some good support at $1.07. I'd say that's a good support level. But
Mm,
the rest of this stuff is not really. You know what I mean? So
yeah.
um, I don't. That's just how I feel about it.
All right.
But if I were to look at like Apple or Tesla, I can say with absolute certainty that specific
Mm-hmm.
levels are support and resistance.
All right. And then when I was watching Mario stuff, right? He was explaining the standard deviation. That's the line, right? The purple, the green one, and the
Yes.
yeah. So that's why I could swear like I was a pro already. I was like, there's a 30% chance, this, that. But right now I'm down. I'm hoping like next week, we go back up.
I think that's too soon for bullishness, to be honest with you.
Oh, And then
I'm thinking around middle of April, we're going to see the market start. I mean, maybe a week or so into April, we might start seeing the market go neutral, and
Mhm.
then by middle to late April, maybe even May, we'll see the bulls come back. And June and
All right,
July are typically very bullish.
all right, all right, thank you. But one more question I have is about when you're selling options, right? So the you said do not get into options if the the volatility, right? The what's that called again?
Implied volatility.
Yeah, the percentage. Yeah, implied volatility. You said if it's above, you only trade if it's above 50%, right?
Um, it depends. Just because IV's at 50% doesn't mean that that's a high IV. So like
Mm-hmm.
Tesla is a good example. The lowest IV I've ever seen Tesla was 60, and the highest I've seen it is like 300. Right. So um,
And like, and so sorry about that, but like that's the thing that got me so confused about the IV, right? So what's the range for the IV? Is it like from 0 to 100%, or like
no.
from zero to yeah? That got me confused too sometimes.
So you need to have IV rank as well.
Mm-hmm.
IV rank actually gives you a percentage of, it's an average based on the last 252 trading days of the year, where the stock's implied volatility range is, right?
Okay.
So
Good.
even though Sundial is at 172 IV right now, its rank IV rank is 15%, which means it's got an 85% chance of growing in IV, and that's bad for you as an option seller. You need IV to be really
Oh,
high so that when theta starts decaying and IV starts falling, it builds value to your contract, or rather, it decays the value of the contract you sold. Now it's cheaper for you to buy it back.
so what do you see that on your screen?
Top left,
The top left.
see the green and
Oh,
the yellow.
50. Yeah, yeah. So the yellow is the highest, right?
The yellow is the IV and the green is the IV rank.
Oh, make a lot of sense. So the fact that the average is 15%, that's bad, right? Because that means like it doesn't go like that high, right? The IV doesn't go that high.
Well, it
Like
just means that it's a low percentage of IV.
low percentage IV. Oh shit. I never pay attention to that though. That's crazy. Oh man. So like the so IV can go like to 400, 600, right?
There is no cap to where it can go.
Oh, I thought like there were a cap. So
Nah.
I like from 0 to like 3,000, and like every day some stock reach sorry like like price sometimes 3,000 a day, maybe tomorrow like 1,000. But like now I got it though. Now I get it.
Okay.
I get it. All right, thank you, appreciate it.
You're welcome.
And then one more question I have, right? When you're selling options, right? So when you're selling options, so the IVs that you should look for, what else you should look for?
When I'm selling options, what am I
Yeah,
looking for?
yeah. And the option change beside the IV.
Open interest.
Okay. So what about the open interest? Does it have a cap to it or rank?
No, open interest is just the amount of contracts that are in that strike.
So it could go like
It could
15,000,
it could go
15.
to 100,000. It could go 200,000.
Oh, what's the highest you've ever seen?
Um, Apple, Apple and Amazon and Tesla. Let's go see. Um, I mean, Apple's got 112,000 right there in one strike,
Damn.
131,000. Let's see, Amazon typically is pretty high too. I don't think it's as high as Apple because it's more expensive. Yeah, that's not as high. Tesla is usually pretty up there. Where's Tesla? See, it's because it's expensive.
Mhm.
I think. Let's see, what's another one that's extremely liquid? Mm, Netflix. That might be. That's expensive too, though. See, they're only in the thousands. What about see Facebook, Apple, Netflix, Google? It's probably going to be not that great either because it's so expensive.
Mm-hmm.
But Apple, being that it's relatively inexpensive, there's a lot more contracts because I mean, if I look at right now, I'm looking at Google contracts, BTO contracts for 416. They cost $5,000. If I look at Apple, the same token, it's 400, or I'm sorry, 1400.
Damn.
Right. So, sorry, no, that's incorrect. This one, 300. See, $300. So
Oh, okay, okay.
if something's expensive, like
Mm-hmm.
Apple, I'm sorry, like Google, Netflix, Nvidia, Tesla, those contracts are going to be really pricey. So there's not going to be
Yeah.
crazy OI there. But when you look at Apple here on the 416 expiration, I mean on the call side, you've got 112, 105, 131, 106, 66,000, 50,000, 17,000, 75,000.
Yeah.
So I mean,
Yeah. Right. Right. Oh. But what app you? Because on Robinhood they don't show the IV rank and the actual IV like that. The way you just show me on your screen.
that's why you need to get off that trash.
Yeah. So what have you using right now? Take on screen, right?
Yeah, that's Thinkorswim.
All right, no problem. All right. Thank you so much, though. So next, so now I'm about to before I place any options thing like that. Before I set any option, now I'm up focus more on the option change. The IV, the open interest, and stuff like that.
Sounds like a good idea.
Yeah, and then I want to be learning more about the trading analysis because that's because you always said like if you don't know how to you support resistance like the term I really wanted to learn that too. So all right, thank you.
You're welcome.
Yeah.
Okay. Pratik, you are next.
Hey, Hostel, how's it going?
Good.
So quick question here. I'm looking for a swing trade on the SPY ETF. Okay. And usually there's a saying that sell in May, go away kind of thing where the volume dies out for the summer. So seeing an inverted head and shoulder on the SPY, I was wondering if we could push higher and what would be an option to play this kind of move, which I have on my mind if I'm explaining myself here.
So yeah, I've heard the expression "sell in May" or "sell in May and go away" because of the volatility. However, the market itself continues upward. Right, that's a bullish time of the year. So yeah, even though volatility kind of shrinks, stocks themselves swell. Not sure that answered your question. Did that answer your question? There it goes again, muting you automatically. There you go. You should be able to talk now. Did that answer your question?
Yeah, Hostile, it did. And one just follow up on that.
Sure.
So if I want to go ahead and like purchase, because you said like having time on my contracts is really important. So what would you think would be a good option play for SPY if you have any insight on that right now? If I'm bullish, 6 months out.
Um, I mean, you could get some leaps 6 months out. Let's see. What's this? September would be 6 months. I'd probably go with leaps. To be honest with you, like 395 strike. I mean, any of those strikes really should work on the September 17th leap. I mean, like I said, I like longer time frame. Be honest, I would go for January of 2022, but that's just me. And it's probably going to be a little pricey as well. for January 2022. Where's it at? Let's see. I know I'm not sharing my screen, so I'm kind of just looking at it. January 2022 is actually not too bad compared to September. So January is, I actually like that a lot better too. So the 395 strike has the best OI. It costs 2,500 for January, whereas September is showing 1872. So it's like another $700. But at the same time, Theta for September is $5, whereas in January Theta is $4. Right, so a little less Theta, especially with the fact that the contracts is worth a lot more. Right, so when I start dividing numbers into that and looking at percentage Theta loss, I guarantee you that September one's 2 or 3 times more Theta loss than the January. So for me, that's a win because every day you're losing Theta. You're losing $4 or $5 a day, and if your contract's 1,800 and you're losing 5, that's a lot more Theta decay than your contract's losing 4 on 2,600 or 2,700, right? So keep that in mind, right? That's very important to understand. And if you're unsure of when the market's going to start moving backward or back up, you get more time. And again, SPY is going to move up in the next 2 to 3 months, guaranteed, 100% guaranteed will move up. Unless something happens with COVID and some kind of black swan happens again, war in the Middle East or something like that, then expect the markets to tank. But if everything continues the way it's going, and no real emergency type stuff happens, then expect the SPY to climb back up and make new highs, and that leap's going to pay. Does that help?
Yeah, Hustle. Thank you so much. And one last question.
Sure.
I was thinking of like a good entry point. So I thought like we will have a little bit of a dip, but that didn't. And as you know, Powell is speaking for next 2 days as well, followed by Biden. So do you think like there will be some kind of a drop for this, which I should be waiting, or like don't just go for these leaps anytime, like whatever there is?
I'm not sure, man. I don't really do SPY. And trying to determine support levels on SPY is a little tricky because generally SPY doesn't come down to support, right? It just keeps going. So it's really hard to say when's a good time to get in. I would say on a bad red day, you know what I mean, like a 5% or 10% drop in SPY, that's going to be the time to get in as far as the leap. Does that help?
Yeah, perfect. Awesome. Thank you so much. Have a good night.
All right, you're welcome. Okay. ERRK. Go for it. ERK. You there, ERK?
Hello?
I can hear you.
Cool. Hey, yeah, ERK is the way it's gonna be pronounced. I'm on TD Ameritrade trying to understand the pattern day trades. And I from your last session, you were mentioning that on cash accounts, we're in the clear, if I'm correct.
As far as day trading?
Correct.
Yes.
Awesome. Like another thing, because I seen something at the bottom. So it's only when you put money into the account that it pens money, right?
When you put money in the account, it does what?
It's pending to just make sure that it takes a couple business days for the funds to be available.
Oh,
and that's what they're worried about on a cash account.
No. So what they're worried about with the cash account is they put you in an account in the situation where it forces you to only be able to trade funds that are settled.
Got it.
And typically with
Okay.
options, it takes 24 hours to settle.
On options. Okay, so if I'm doing just straight shares and I'm in and out of shares all day, I should be able to do that
48 hours for shares to
for.
settle.
Oh, okay, okay, okay. I'm thinking something instantly. Okay, so making sure that will there be an alert for that that says that it's there, or should I look at my account?
There should be something in the account that tells you what settled funds. Like there, it'll actually say, "This is your settled funds," and whatever settled funds is, that's what you can trade.
Okay, I'll Google where to find that. 'Cause yeah,
You're
that's
what broker are you using?
I'm,
Again?
I'm on TD.
Is it
I'm on TD.
Thinkorswim or just TD?
I literally just have put in a couple like $50 into TD just to play with it and see where we're at. I haven't really executed a full trade yet. I was just kind of worried to put
No,
so much money.
my question was, is it Thinkorswim platform or is it just regular TD Ameritrade?
I'm on both.
Okay, so on Thinkorswim, let's see, move this thing off so I can. On Thinkorswim, you can go to the monitor tab and then click on account statement. And in account statement, just give me 1 sec. In account statement, it should say available funds for trading. That's the one you're looking for.
Okay. I'm so new to TOS. It's I'm just trying to figure out where everything's at. So I don't even know where that monitor tab is. You know?
Top left. There's a bar at the top. It says monitor, trade, analyze, scan, market watch, charts, tools, education, help.
I don't know what I'm in because on the top left it's just the Thinkorswim and it says right underneath it account summary. Account.
I'm not sure. I'd have to see a screenshot, to be honest with you.
No worries, man. I wrote. Let me write this down real quick. So you say monitor screen. I just want to know. Could you repeat the format of what I'd be clicking?
Oh yeah, monitor tab and then account statement.
Account statement. Monitor tab. Account statement. Cool. So I'll Google it or something. Like I said, this is a lot. I didn't think TOS would be this complex. I mean, compared to Robinhood, but I can see why a lot of people started off with Robinhood.
Yeah, I mean that's what I was saying. It's a steep learning curve. I mean, if you're not a fast learner and 1000% driven, TOS is probably not the best platform to start on. That's why I recommend people starting like Webull because it's kind of like baby steps, honestly.
Okay.
Me personally, man, I started with Thinkorswim because I'm just one of those people where like I'm so determined. Like I spent 2 weeks straight just learning the platform without even trading. I just went and learned everything I could learn about the platform, and then once I set everything up the way I liked it, then I started trading. So
truly exactly what I'm going for here. I'm not really committed to making any trades and obviously playing it by ear. I'm still trying to figure out how to draw support and resistance lines and making it nice. So yeah, I'm literally just trying to figure that out versus eyeballing it. And it's gonna take time. And I appreciate the help and the answers.
You're welcome. And go watch my my playlist of stocks on my YouTube channel. And there's a lot of good information there as far as support and resistance. Okay. Let's see. NG, you're up.
Hey, Hostal, how are you?
Good.
So can you look at MITT for me?
MITT.
Yeah. So back in December, I got 20 contracts for this for a $3 call. And in January, I sold 15 of them for $1,700. So I made like $800 profit in a month. And this contract expires in June. So what do you think? Like it's gonna go, and I'm still holding 5 of them. Should I just sell the rest of the 5 or should I keep them? Because before COVID, this was on like $15 range, but now it's at like $4 something.
Okay. So how many contracts did you start out with?
20.
20?
Yeah.
And you sold 15, you got 5 left. Out of those 15, did you make enough money for those 5 to be free?
Yeah. I mean, originally I got 20 contracts for $900 and I sold 15 of them for $1,700. So I made profit
Oh,
plus.
okay.
Yeah.
Well, in that case, I mean, you could totally let that ride. I would probably not go any further than a month though
Okay.
from today, because once data starts eating into that, I mean, I'll be honest, if you're, I would look for the stock to try and break the resistance point of right around 478. If it can break that, and next point's going to be probably 550.
Okay.
Definitely dump it then, definitely. But if in the next 2 to 3 weeks
Mhm.
it's kind of just going sideways or just slow moving and you're still kind of in profit, I would probably dump them anyways.
Okay. Sounds good.
I
Thank you.
wouldn't hold stuff very long. I mean, I like leaps for the fact that you got a lot of time, but
Mhm.
when I'm in a leap and I see profit, I take it because the
Okay.
market's going to come back down. I'm going to be able to get back in that same exact position and do the same thing again.
I mean, the reason I'm holding this is because since the bullish market is coming, so I was
I don't think you have
thinking,
enough time.
oh, it's expiring in June, so I
It's
don't know.
still not enough time. You need to be
Okay.
out of that position 50% days till expiration, in my opinion.
Okay.
So
Okay.
if you were looking to take advantage of June time frame, you should have gotten September, October, maybe even November.
Okay. Okay. Got it. Thank you.
You're welcome. Okay. Safwan Abdullah, you're up.
Hey, Hostel, how are you, man?
Good.
Appreciate you taking 2 hours out of your day to answer all of our questions and to educate us, first of all.
Oh, you're welcome.
All right, this is just a general question, not anything about like charts and stocks. But when you starting to like trade stocks, were you also one of those people who started losing money initially and then you
Yes.
still kept on? All right,
I lost
just wanted to.
20,000.
Okay, and were you young? Were you old at that point?
Let's see. 12 years ago, I was 26.
Okay. All right. That's good to know. And then, did you make that money back quickly, or were you patient enough to kind of learn, understand everything, and then gradually make that money back and then profit after that?
It took a little while. But then again, I mean, the journey is I guess really the only way to explain it is to tell you the journey. I started with 10 grand. Excuse me. I started with 10 grand. I bought 10 different stocks with $1,000 a piece, and I went long on it. I bought blue chip stuff with dividends. I held it for 4 or 5 years, made $30,000 total, including the 10 grand. So made 20,000 on top, and that's including dividend reinvestment and all that. I took that out, um, put it into my house, my first property for a down payment, and then I had $1,000 that I put into Apple, and that was, I think I was still in some of my stocks then. I had jumped into options um, with $1,000. I made $7,500 off Apple, so total I was at $8,500 in profit. I thought I was a pimp, thought I knew what I was doing, and started losing. And for shit, from like 2012, 2013 until 2015, I was just straight losing money. Um, I wasn't losing like $1,000 a day kind of thing. I mean, that would have been a lot more than $20,000 loss. But I over the course of the next 2 years, I was doing small plays, $25, $50, 75, 100. I was losing everything. There wasn't a single thing that I won after the Apple play. I got into a silver mini futures contract, cost me 2,500 with margin. Within 3 days, I was down 7,500 on just that. So, I mean, I lost everything from Apple that I made plus $20,000. So technically $27,000, $28,000 I lost. When I finally started making money was in 2015 when I learned support and resistance. Just that alone, I was making money. I started with $700 because I knew, doing options, I was like, I'm losing my ass. Something's got to change. I can't keep doing this. I can't keep losing money. That's not sustainable. So I took a step back. I started doing shares. I learned what swinging shares was. I learned what support and resistance was. Started with $700, and from 2015 until I'd say 2018, I was making pretty good money in shares. I was up thousands, all the way until 2020 of April, or I'd say 2020 prior to COVID. My account had gone up from 700 to $35,000. By then, though, I was doing credit spreads. I was doing cash secured puts. I was doing covered calls. I was swinging shares. Basically trying to build my account so that all I needed to do was cash secured puts and covered calls, which is kind of where I'm at now. And since April, so I did lose some money during COVID. I was kind of actually cash heavy, luckily. So some shared positions I was in prior to COVID, I think I was, I think it was up about 39,000, and I lost about 4 or 5 grand in COVID. But I averaged down everything and then got right back up to 40,000 by April or so, or middle of April, I was up to 40,000, and by the end of the year, I made it to 68,000. So I've made 105% return on my account in 8 months. So that's really how it went down, right? Making lots of mistakes, losing a lot of money, very expensive learning lessons. And I didn't have YouTube. I didn't have Discord. All I had was real trading and paper trading on Thinkorswim. It cost $12 to get in and out of a trade, just commission, not the $4 of option contract fees, or $4.25, in and then out. So technically I'm paying right at $20 just to get into an option contract. And I was like, that's why I was going for the cheap contracts initially, because a $25 contract actually cost me 45. So it's really, really, what do you call it? Skeptical and hesitant once I was just continuously losing money. So I'm like, I got to take a step back. This is getting expensive. And I learned how to swing the shares, and it was still expensive. It was still $12 to get, $12.95 to get in and out of a trade. I mean, it's ridiculous. So until now, it's basically free. So there's that. Does that help to answer your questions, or give you some insight on what to expect, or at least how it makes you feel about the position you're in, I guess.
Yes, it definitely helps, because every time I make some money, I get more interested. I learn more things, more technical analysis, and more like fundamentals. I start focusing, and then I try to do shares most of the time, and I pick up shares on my own, and I tend to not make a lot of money, but it compounds and it adds up to good money. And then I jump into one contract, and then I wipe out all my gains for the week, and then I'm like, oh man, now I'm back at like ground zero, and then now I have to start back up again, and it's a long journey. So
well, that's the thing here is whatever mistake you're making, stop making it. Move on from
Yep.
that. Like if you're buying options and you're losing money, stop doing it. Find something else to do.
Yeah. Yeah. I've been sticking to shares for the most part. So yeah, but generally everyone tells me like, whatever you lose in the stock market is all learning lessons. So that's the way I've been taking it. And I've I've known nothing like 1 year back because I started trading during the COVID time and learned a lot of my mistakes, but luckily didn't blow up my portfolio or anything. I'd say I'm down like 10% overall on my portfolio. I was up at some point and then now I'm back down. So, it's just that journey. It's a little hard to keep up with the up and down, but I think it's just a matter of like learning everything and then eventually it just picks up and then we become profitable and learn how to take losses in a minimal way.
It's learn how to not take losses at all. That should be the goal.
Yeah.
And if there's a
Eventually.
strategy out there that contradicts that, then in my opinion, I wouldn't be doing that strategy.
Yeah. No, this lecture is definitely helpful because there are some positions where I did cost average and I'm close to 100 shares in some of them, so I will probably look into that strategy where I can use my shares to leverage some and make some money of it.
You should definitely pay attention to the Selling Premium channel. I think that might be a better place for you.
Yep, definitely. Thank you very much.
You're welcome. Okay, Joey.
Hey, I'm back. One last question here for you. Thanks
Okay.
for taking your time, man. You're seriously so helpful.
No
So I
worries.
just opened up my Roth. I'm trading on TOS, and I am noticing that I do have a 3-day trade limit, which is fine because I don't intend to be, doing anything risky in this account. I just want to leave it to CSPs. I was just wondering though, in situations like if my account does grow and I do have multiple positions, are you trying to limit the amount of times you would have multiple CSPs with the same expiration, just in case like you needed to make some day trades over 3?
Well, it doesn't matter the same expiration contracts. All that matters is whether or not you got in it today and you're trying to get out today.
Oh, duh. Okay, I'm thinking of it wrong. Okay, gotcha. Thanks. That cleared that up for me. Sorry.
Okay. You're welcome.
Okay. My next question is related to a CSP on Mara. I was hoping you could give it a look. Me and FaZe were talking about it in Selling Premium today, and I want to start off with this trade. I believe it's the 416 strike, 36 put.
197 open interest. I'm not a fan. I like 35 strikes a little better.
That's what I thought too originally. So I was curious why, FaZe was interested. I think he's going to wait to see if the price will drop a little bit lower. I think there's a support level at like 37 here, or maybe even 39.53. But is that open interest really deterring you ultimately?
Yeah, I wouldn't trade anything under 500. I mean, unless you want to own it or unless you want it to expire worthless, and unless that's your goal, I wouldn't like if you're like so for me, I like to flip stuff. Like I don't like to hold it till expiration. I don't like to let it expire necessarily. I don't necessarily want to own shares if it goes in the money. I'm more interested in getting in and out of that position multiple times in a week.
Okay.
3, 4, 5 times if I can. The more the merrier. And in that scenario, I'm looking for a lot of OI. But if you want to let it expire worthless or you want to be assigned shares, it doesn't matter what the open interest is.
Sure. Well, if you're able to sell to open the contract with low OI, you could always buy to close it back. There's no risk in that. That's not going to happen. But you're saying that given that you like to get in and out of the same trade multiple times in a week, it'd be better to have more buyers because
Well, it would
they're
just
more
be
likely
better to
to.
have more liquidity is the better way to describe that. If you're trying to flip something, if you're trying to sit on it for a while and let it expire worthless, then you could have zero OI. I mean, at that point, it's like you're going to need something because if there's zero, then no one's going to buy that contract or sell it,
Right.
right? So, I mean, 167 or 197 OI, somebody's going to buy it, right? But if
Yeah.
you're trying to get out, let's say you sell 3 or 4 and you're trying to get out tomorrow or the day after, well, it might be a little tough. It might be a little tough for you to get out.
Hmm.
So keep that in mind. That's the importance of OI.
Okay. Yeah, and I just appreciated the explanation of like how to manage CSPs better than managing a call option that you buy. There's no management there, but with CSPs you have multiple options. I was curious to know like what your thoughts were of like, obviously I want to start to make my own decisions and take my own trades, but to follow along with FaZe for maybe the first one, just to get my understanding of maybe how to maneuver my options when the time comes, if the time comes.
Well, I mean, you don't have to follow phase, right? I mean, you you can use some of the tickers that we use, some of the ones that are great IV, good IV and nice premiums. You get into something, you can always ask questions, right? I mean, if you get into
Mm-hmm.
a position you don't know what to do, you ask us, and we'll tell you, we'll give you some choices, right? Some ways out. And that's
Yep.
the beauty of this types of strategies. There's multiple ways out. There's multiple ways to make money and multiple ways to get out without losing. So it's a fantastic way to start, and it's safe. So if you do make a mistake, we can still probably get you out of it.
Yep. Yep. Cool, man. I really appreciate you and all your time. Thanks again.
You're welcome. No problem. Okay. Let me take a look at. I know there's probably a ton of questions on the Zoom chat. I want to see if I. Oh my goodness. Let's see if I can. You guys, please bear with me. I'm just going to try and run through these questions real quick. Let's see. Just going to kind of scan through. It's not necessarily questions, it's lots of comments. Okay, Jerry's not in here. Just so we can get out of here. Brohim asked what CSP stands for. Okay, it looks like Joey answered his question. Let's see. Viral asks, can we sell long call before strike price or below strike price before expiration? Yeah, I mean you can sell long, you can sell anything before expiration. You don't have to. Nothing really has to be uh, in or out of the money. Okay, looks like I went through all those questions. Not too many there actually. I'm gonna check YouTube real quick. Um, okay, looks like Christian said, when do you usually exit an option? I have learned when to get in, but not when to get out. I tend to let my losers run and cut my winners too short. I get out of option positions. It depends. If you're talking about buy to open, I get out pretty quickly. When I see profits, I get out. I'm not trying to ride or squeeze that position because theta's not on my side. So when I see profits, I get out. And when it comes to selling options, I typically look for 50 to 65% returns on a position. If I see 25 to 45% in the first 5 days, I'll probably get out with that. Okay. Anybody else have questions? Please raise your hand. Christian, go for it.
Hey, Austin, how are you doing?
Good.
Quick question. So, which time frame do you usually like to stick with when it comes to buying options?
I like long-term time frames, 1 year, 1 day. I look for gap fills or gaps that need to be filled, and then I buy leaps when they do get filled. That's how
Okay,
I
so
do it.
you're more of like a swing trader than like a scalper, right? Because scalping will be like in a lower time frame, correct?
Yeah, scalping, you're probably going to be need to looking at a 5 day, 15 minute. I
Okay.
don't mess with that.
Okay.
That's too risky for me.
And one last question. So ticker GPS, which is gap, looks like it's forming a bull flag, and I just wanted to confirm that and like get a second set of eyes on that. See if I'm predicting it as I think it will.
Yeah, I mean it kind of looks like a pennant also.
Okay.
But that's the problem I have with chart patterns is unless they're really, really evident, you're kind of throwing darts at a dartboard,
Okay.
right?
So you
Because
like to more go off like support and resistance, correct?
yeah, I like that much better than chart patterns. I mean, don't get me wrong, chart patterns are great. It's just they may not be what you think they are. Like if you see, like right now, let's say you see a bull flag and I see a pennant. Well,
Mm-hmm.
you know, is it either one of those? Is
Yeah.
it actually, is it something completely different? I mean,
Mm-hmm.
it's not like there's some stuff out there. I think Apple has an inverse Head and Shoulders, which is like definitely an inverse Head and Shoulders. I could look at it and say that is definitely what that chart pattern, right? I mean,
Mm-hmm.
trying to see what time frame. Somebody, I can't remember what time frame that was shown to me. Let's see.
Might be the day.
Zorro was the one that posted it in Advanced Trade Floor. See if you can find it there. But he drew it out, and it's exactly inverse Head and Shoulders, which is a bullish chart pattern. So I think that chart patterns are important,
Mm-hmm.
but they can be misleading. You might see something that's not actually there. So that's my only drawback as far as chart patterns go. So unless you look at it and you can draw it perfectly, I'm skeptical. Grain of
Okay.
salt.
Okay. Thank you.
You're welcome.
And so like you said, support and resistance, very important. So there's like a lot of them where I can tell where it's very evident, right? Where you can see there's a support, and let's say it was at a downtrend, and then the next day there's a bull candlestick, right? It looks like it's bouncing off it. So I'm the type that's like very hesitant, and I guess I second guess myself, even though I see it right there, right there. How do you go about it as to like confirmation as to when to get in?
Um, I don't necessarily go with confirmation with cash secured puts because I've got time decay on my side. So
Mm-hmm.
even if I get it wrong and I buy enough or I sell enough time to where
Mm-hmm.
it gives it time to swing back in the direction I need it to.
Mm-hmm.
That's how I do it. I don't really look for confirmations because confirmation is more along the lines of, is it a breakout? Is it a reversal?
Mm-hmm.
Those types of things. That's what more confirmations used on. But my style of trading, I don't necessarily look for confirmation. I'm just looking for strong levels that have support and solid premium, and then I'll sell CSPs on that. Right? I could care less about breakouts. I could care less about confirmation or that kind of thing. As long as I'm not getting in and it's downtrending and continues downtrending, I'm going to win that. And even then, if it's doing that, I'll still probably find a way out to win. Um, so, I mean, but I'll say this: confirmation on, let's say, a breakout, something jumps up above resistance. That candle closes above, opens above, closes above. That's a good signal of a breakout confirmation or buyer strength confirmation. Something that went over resistance, stayed above resistance, and the potential of it continuing upward is a little bit higher than it going downward because it broke that resistance. It stayed there, and as long as the buyers stay in control, then there's very high likelihood that that's a solid confirmation.
Okay, that answered my question. Thank you.
You're welcome. Okay, who else? I'll probably end this one early tonight since I'm doing another one on Thursday. So hopefully you guys ask whatever questions you have left before we end this. Looks like Brohim has a question. Brohim, I'll unmute you. There you go, Brohim. You can talk now. I'm not sure what you're asking though, so. Well, you were unmuted. I'm not sure if your mic's working or not. I don't hear you.
Can you hear me now?
I can hear you now, yep.
Awesome. Yeah, so I was just looking at like option chains. So I haven't made any option trades, but I was just trying to understand the chain a bit. So I was looking at that ticker MSOS, and what confuses me is when I'm looking at calls with the same expiry, so they have the same expiry, just the strike price changing between $1, like between the 59 call and the 58 call. The 58 call was negative 17% intraday change, but the $58 call was plus 3%. And I just don't understand how. I mean, the only difference is that $1. I understand there's the Greeks involved as well, but what would affect it so much that $1 has that big of a difference?
Probably implied volatility or bid-ask spread or a mixture of both, or rather, I did say implied volatility. Jesus, yeah. So IV bid-ask spread, those are going to make a difference on the strikes. So both of them have low OI, it looks like, but the 58 strike has. Let's see, 58. You said 57 and 58. Is that right?
It was 58 and 59.
I don't know. Bid-ask spread's the same. OI is very, very similar. One's just a little bit further out of the money. I couldn't tell you, be honest. I'd have to see the stock move. Like I'd have to watch it in market open and see what it's doing, and then I could probably give you a better answer on that.
I see.
But typically that's usually why, because the bid-ask spread changes and or IV for that strike changes.
Okay. Yeah, I wasn't exactly sure, like, because I'm still trying to figure out if I am going to make an option call trade, like which exact strike or which exact expiry. And I'm looking at that and I'm like, I don't know how to choose anymore because if you picked one, I was up 3% today, and if I picked the other, I was down -18. But
Well, if I were you, I would probably, like I've been telling everybody here, get something with time. You know, if you're going to get in this particular ticker, you get something for like December, or November, December, January. I wouldn't buy anything that's not at support. I wouldn't buy anything that hasn't filled a gap. Right? I mean, there's reasons why you get into a long position like that. So you got to make sure that you understand the whole why and how behind it before trying to get into it, which sounds like you're trying to do. But when all else fails, buy time, and that way, if you're getting that support, you're buying time. It takes time for it to move back up. You're still going to find profits. Whereas if you don't buy time and it takes time for it to come back up, that contract's going to expire worthless and you just lose. So that's the reason why I suggest leaps, because it allows you time for the stock to move in your direction and show you profits. So maybe start with leaps or shares. Start with shares, right? Or learn how to sell options.
Yeah.
Because that'll teach you about theta. That'll teach you about bid-ask spread a lot. That'll teach you implied volatility. You know, people don't realize how important it is to understand how to sell options. Even if you don't want to do those strategies, understanding theta, understanding implied volatility, understanding how premium affects contracts and bid-ask spreads affect the contract. You're going to learn that kind of stuff when you sell options more so than buying.
Okay. Awesome. All right. Thank you.
You're welcome. Go ahead, Danny.
Hey, can you quickly explain the bid-ask spread thing? Because I mean, I noticed that too in the top of looking at TOS. You got the actual stock price, and then you have the bid and the ask. Well, I think I know what it is. Like one's what someone's willing to pay, and what somebody's asking to pay, or something.
Well, the bid is what I would sell it at. The ask is what you'd buy it at. And the difference between the two, if it's a wide difference, then that means that there's more buyers or sellers. But if it's a tight spread, then that means that the ratio to buyers and sellers is pretty even.
Okay, that makes sense. Thanks.
And you want an even ratio. You don't want to be lopsided because, you got to remember you're playing both sides. When you get into a position, whether it be buy to open or sell to open, you're playing both sides, right? You get into a position, you bought to open it, right? And you're trying to get out. You're now selling to close, and vice versa. Yeah. You're selling to open. You have to buy to close. So you're playing both sides of the coin. It just depends on which coin you're playing, which side of the coin you're playing first, right? And if you get into a contract where there's more buyers than sellers, then it's going to be easier for the seller, like me, to sell a contract. But when it's time for me to get out of that position and there's still more buyers than sellers, it's going to be harder for me to get out of that position, right? Because now I'm on the other side of that coin where the liquidity is lower. So tight spreads is what you should be looking for.
Got it. Thanks.
You're welcome. Okay. Go ahead, Steven.
So I was kind of just piggybacking off of what Danny was talking about. It's like in terms of like open interest versus bid ask. So what do you do if like if your bid ask is your spread is really tight, but your open interest is like under 500? What then?
That just tells you that tight spread means you got equal on both sides, and even though OI is a little low, it's still a good even ratio.
is that still favorable though? Is if like your
Yeah, I mean, I'd say
spread is
that's okay. That's not a bad thing to get into because that means that, you know, if let's say you got 300, that means that if the spread is let's see, let me find something. Let's look at Apple. Let me look at Apple.
I've noticed like typically when I like look for something, I don't know if I just based off what I do personally is like I try to look for something where it's like 10% or less. Like I don't want, you know what I mean?
I don't necessarily put percentages on the bid ask. What I do is, I mean, I'll just look at it and say, all right, right now Apple on the 416 contract on the 123.75 strike. That's kind of odd, but on that strike, it's showing 11,900 contracts, and the bid ask spread is 355 and 360. So it's a 5 cent difference. That basically means that's almost 50-50. It might be like 49-51. And you can't tell which side's which. You just know that there's almost 12,000 contracts there, and they're all pretty equal to sellers and buyers. So that would be something you're like, okay, this I should have zero problem with getting in and out, and I should have zero issues with my contract being adversely affected by a lopsided ratio.
Okay, makes sense. It's like, yeah, it's like even if you had like 300 open interests and it was like pretty tight spread, then it's maybe like 150 or close to even on both ends, like in terms of buyers and sellers.
Yeah, it shouldn't be an issue to get in and out of one contract on that strike.
Okay, just curious.
Okay.
Thank you.
You're welcome. Okay. Who else? Anybody else? Go ahead, Steve. Ask another one.
I'm sorry.
No worries.
So like back to like your like CSPs and everything. Like, do you recommend it for an IRA? Like I was
That's what I do.
If I could,
That's
okay,
what I
okay.
do in my IRAs, CSPs.
So you probably do like you buy shares and
No, I don't buy any shares anymore. I got
okay.
enough capital to do nothing but CSPs, so that's what I do.
Interesting. Okay. Yeah, that's good to know actually.
Yeah, once I hit 30,000,
Yeah.
I'm like strictly CSPs, and that's 30,000 per account. All of my accounts are about the same value. I mean, two are at 36 and one's at 30, so I basically mirror all three accounts with CSPs. So if I do one PLTR CSP, I'll do it in 3 accounts.
Yeah, you just like mirror it with all of them.
Yeah, I mean, it's impossible to continuously try and understand which one's got what. Not only that, you know, I've got 2 Roth accounts. One's my wife's, one's mine, and she's gonna be like, "What the hell? If mine is higher in value than hers, she's gonna, that's fucked up." So, I gotta. I secretly made it so that her account is slightly higher than mine, so she's not questioning me.
Smart choice.
It's not like she looks at it anyways, but you know, that's kind of how I do it though. Jokes aside, I mirror all 3 of my accounts and do nothing but CSPs, and all 3 accounts are 30,000 or higher. So
How much do you recommend like you start with to begin like CSPs? Just enough for 100 shares of whatever. So like you can start with as much as you want as long as you have 100 shares of that stock.
yeah, I mean, I'd say the more you got, the better, right? I mean, if you can dump 100,000 in, that's where I would start. But if you've only got, 10 grand, that's where you would start. If you've only got 5, you could probably start with 5 grand. But I'd say ideally, if you've got 10 grand, don't start with 5, start with 10. But best case scenario, if you've got the money, 20 or 30,000 is the best place to be because you can make anywhere from $2,000 to $4,000 a month on 30 grand.
It just allows you to buy to sell more or to collect more premium basically.
Well, no, it allows you to get into more positions or more tickers or multiple contracts of one ticker. I mean, there's just more leverage.
Mm-hmm.
So That's kind of what I do. I'll get into one regardless of which direction it goes, and then if it goes down, I'll get two or three more of it, and then in 4 days or so, it's going to pump back up, and I'll be able to take 50% returns on the four I just got into, and that one that I'm still waiting on could still be down. So that's kind of how I do it. So I don't mind letting one sit and even going in the money and expiring and taking on shares. But if I'm able to flip that same thing 3 or 4 times on a lower CSP strike and take in, 150 or 100 or 150 a contract and got 3 or 4, I mean that's pretty solid in a week. If I can do that 2 or 3 times in a week, that's baller.
Yeah, that's pretty ideal. Yeah.
Doesn't always work that way, but the past month I've done that, and I did it with plug, I did it with PLTR, I did it with laser. I say overall I've probably made $3,000 on that. So, but I got assigned shares and they're all down, so it doesn't
But you're
look
not
like I
really
made.
worried.
Yeah, I mean it doesn't look like I made money, but I made money. So when those things go back in the direction that I want them to, then my account's really going to show the value that I've actually made. Because right now it's down, but once they start coming back, that money that I made, a week ago or 2 weeks ago, it's going to show up then because the profits have come back because everything's down, right? So it's just kind of like a swing, right? It's swinging. The value of your portfolio swings with the market, but as long as you never take losses, it's always going to go up.
And yeah, the long term, basically.
Yeah, exactly.
And then so for these, you put more, like, not more of a focus, but you focus on like fundamentals as well, like how well the company is.
Some
what kind, like what they're.
Yeah, some.
Okay.
So like if I'm going to do cover calls, like I've got Fastly, I'm doing cover calls on Fastly, or not yet, but I will be. I own shares. I'm looking to swing the shares, number one. Number two, I'm looking to make money off the shares while I swing them. And number three, if I'm swinging something for at least a month, a little bit of fundamental analysis needs to be done. If I am forced to hold it for 2 or 3 months, or if I think I'm going to have to hold it for 2 or 3 months, a more in-depth analysis needs to be done on fundamentals, so you don't get caught in some kind of rug pull.
Do you typically still hold it through like earnings, or no?
It doesn't really matter to me. I mean, I guess I would say I would advise against it because earnings could go either way.
Like if you bought, or if you were like assigned shares right now, right, and like a month from now, there's earnings for Fastly. Would you typically like still hold through that and just like cover calls after that, after
it
you get the earnings, or?
It depends. So if the trend direction is up, I'd probably hold it. If the trend is neutral or still kind of doing what it's doing right now, I mean, honestly, I don't really care. It doesn't bother me. News is news. It's either going to hurt or it's not. It's not going to be too bad if it does hurt, and it's going to be great if it does do well. So I think the downside, there's not as much downside as there is upside, especially if you're in at a support level, right? So, and I also look at how does the stock perform and move during ER, right? I look at historical ER and trying to determine that. And if it looks like it pumps every single time ER comes, I might dump the shares around then. So each individual ticker is a unique analysis.
Okay, thank you so much.
You're
Appreciate it.
No problem. Okay. Anybody else? Well, I'm pretty tired. I think I'm gonna call it a night. Hope to see you all back here next Thursday with more questions. Hope everybody has a good night and good luck in the markets. I hope we have some green tomorrow for everybody. Everybody can be happy. All right, that's it. I'm signing out. Everybody take care. Good night.